Look, it's very interesting. I actually do like the Japanese financials. I do think that, you find that net interest margins basically are improving. Banks are the key beneficiary of a domestic economic recovery. And you see it. You see it in the data. Their earnings are growing very nicely. Still very, very good dividend support at around 3.5%. So I think that looking at Japan's financials, the banks in particular, but also some of the specials, like, for example, Daiichi Insurance, I think is a very, very good bet because they've got the great balance between domestic dominance and global expansion, which is really what you want.
I'm very pleased that you mentioned those Japanese financials because, there's this growing expectation that we are going to see movement when it comes to NERP, or we are going to see movement when it comes to easier monetary policy. And we've discussed this many times before in the past. But the thing that really irks me, and I suppose it probably irks the BOJ as well, is there's this inbuilt expectation that, that the Shunto wage negotiations, the next round, are going to trigger some upward pressure when it comes to wages. But we haven't seen that play through even yet from the last set of negotiations. Even from an inflation-adjusted basis, wages is still meandering. And yes, the unions are calling for, whether it's, Rengo and their +5, or whether it's Ua Zensen and their +6 in terms of wages. What happens, though, if we get to that negotiation? We hear all the bells and whistles, all this expectation, but you don't necessarily see the promised delivery of that wages growth coming through vis-a-vis inflation. Does the BOJ move anyway?
Look, I think, this is a wonderful discussion to have because it's endlessly. And then, you come into March, end of March, April, and finally you get the Shunto number, and then it's back with some other issues. I think much, much more important is actually the development, of fiscal policy here in Japan. And as you know very well, Prime Minister Kishida, for better or for worse, is budgeting for another round of tax cuts actually coming next year. So ironically, in terms of the support for the consumer, the fact that you are going to get a tax cut right around 1% of disposable income, that actually, I think, opens a little bit of a door for Governor Ueda at the Bank of Japan to begin slowly, but the tax cut allows for a window for the Bank of Japan to actually normalize short-term interest rates, in my opinion.
That's going to be an interesting conversation, and I'm sure we're going to have that in the future. But in that respect, all this, the $113 billion of extra stimulus that's coming through, plus whatever comes through in the FY24 budget, what companies benefit the most from that in your mind? If we're not talking about financials, is it just is it consumption-related stocks? So who do you think wins in this scenario?
So you make the good point. I think that it's time to look away from the Japanese exporters, from the big machinery companies, from the capital goods companies, for the car companies, and really focus on domestic demand. As I said, the biggest gearing that you get is through the financial sector, the insurance companies, or the mega banks. And then on top of that, if you look at any hospitality play that you can come up with, like I love Cultural Convenience Club, which is sort of a mid-cap company, but here's a company that actually is geared into the lifestyle superpower that Japan is.